Hello, friends. How are you? Hope you are doing well. So, we will continue our discussion about the materiality topic assessments. And last time we were discussing about the double materiality in ESG. Let's continue our discussion. So, next question is, what is Sustainability Accounting Standards Board and SASB materiality? So, SASB standards talking about the financial materiality in the context of sustainability information representing the sustainability factors. Those are material to short term, medium term and long term enterprise value. And what is this materiality analysis? A materiality analysis is a methodology of a company can use to identify and estimate possible environmental, social, governance related factors which might impact the business and its stakeholders. And in terms of GRI, what is GRI materiality assessment? In GRI's approach on materiality, we think about an inside out assessment. So, inward and outward assessment. So, as such, GRI advocates for an assessment that consider all impacts, like for an example, operational, reputational, financial, litigation, market related. So, impact should not be deprioritized on the sole basis of not being considered financial materiality for the organization. So, what is the materiality framework? So, ESG materiality framework is the integration of ESG related factors into our investment process, and which is one of the core pillars of our responsible investment framework, which is enabling us to enhance our decision making by assessing the risk or opportunities that individual companies might face. So, why do we need materiality? So, the main reason and importance of materiality concepts are to keep a check that companies do not hide crucial information from the investors, lenders, and other regulators of the business. So, it develops faith for the business among the users. So, how do you write a materiality report? So, there are certain components of preparing the materiality report, which are identifying internal and external stakeholders, prioritizing those stakeholders, identifying and prioritizing what you want to measure, design the materiality survey, launch the survey and start collecting the insights or data, analyzing that data, sanitize the data and put insights into the actions actually. Next is, what are the material issues for any company? So materiality issues include environmental, social, governance risk that could affect the reputation and the ability to create value over the short, medium and long term. What are the examples of materiality issues? So different materiality issues can be identified as having the greatest impact on business and the generation of long term value. So for an example, financial performance, economic development, energy affordability, energy reliability, energy efficiency, fuel diversity, customer satisfaction, security, cyber security, climate change, right? Greenhouse gas emissions, waste management, habitat and biodiversity, environmental justice, workplace health and safety, human resource management, local community, ethics and integrity, transparency, corporate governance, stakeholder engagement. These can be the examples of different materiality issues. So, next is about why the materiality matrix is important. So, a materiality matrix which is helping the organization to visualize the findings of any materiality assessments. So, many variations have emerged to represent what's important for reporting and what's important for strategy. So, what are the two axes used to build a materiality matrix? So, materiality issues are plotted on a matrix based on the assessed stakeholder interest on y-axis and business impact scores on x-axis. So how to use materiality matrix? So the matrix of materiality is commonly used to reflect results of a materiality assessment in an easy to understand format. While a materiality matrix usually shows the impacts of an ESG issues on an issuer's business, which is a value of x-axis, against that on the issuer's stakeholders, which is a value of y-axis. So issuers may also use different values for the axes based on the area of concerns. Next is about why is ESG materiality important in sustainability reporting. So ESG materiality is used to tailor or customize reporting standards for individual corporations, but also to justify the non-disclosure of different dimensions of sustainability, leading to serious problems with the relevance, consistency, comparability, and decision usefulness of the corporate reports, which are basically the principles of the corporate ESG and sustainability reporting actually. So what should I do after the materiality assessment? Then recommend what actions the board should take as a result of assessment. So what management related actions are required to manage those materiality topics. So feed the outcome of the materiality analysis into wider corporate strategy, developing the strategic action plans, include the implications of identified social and environmental trends and their potential impacts on the business in the corporate strategy process. So who conducts a materiality assessment? There is no one way to conduct a materiality assessment, but many companies rely on external consultants to help them, while other companies with more robust sustainability teams managing the process by themselves. How do you run a materiality assessment? We have discussed the steps of the materiality assessment process itself, which I already shared. For an example, identifying the internal and external stakeholders, conducting the initial stakeholder outreach, and identifying and prioritizing what exactly the requirement is and what you want to measure exactly. Design the materiality survey, launch the survey and start collecting the insights, analyze the insights and the stakeholder weight section. Next is about what are the most materiality ESG factors. How do we decide the most relevant and most prioritize materiality topic? The relevance of sustainability factor to a company's financial performance. Financial materiality ESG factors are the factors that could have a significant impact, which can be either positive and negative as well, on a company's business model and value drivers such as revenue, growth, margin, required capital, and the risk. But again, we need to keep in mind another factor, which is the non-financial materiality to the stakeholders. So that also we should keep in mind when we prioritize the ESG materiality topic. What is the difference between SASB and GRI? These two different frameworks or standards. The GRI standard are the world's most widely used standards for sustainability reporting, and the SASB connects businesses and investors on the financial impacts of the sustainability. But when GRI we talk about, it's talking about double materiality principles actually. And what is the difference between TCFD and GRI frameworks? So TCFD framework focusing specifically on helping organizations to disclose information about their financial impacts related to the climate change risks and opportunities, whereas the GRI standard focus on helping organizations to communicate about their impacts, like outward impacts related to the climate change and sustainability topics, emissions, water, labor, human rights. These are some examples of the materiality factors, and along with the how these impacts are being managed. Now we see what is meant by materiality in auditing. In auditing, materiality means not just a quantified amount, but the effect that amount will have in various contexts. During the audit planning process, the auditors decide what the level of materiality will be, and taking into account the entirety of the financial statements to be audited, and as well as non-financial statements as well. So we can see what can be the different reasons why senior leaders should care about the ESG materiality. So there are certain reasons which I can explain here, like materiality allows you to manage existing risk and identify new opportunities, and even you can identify the new risk business threats, and we can identify the new opportunities as well. So ESG is now on the investors radar and on board members agenda as well. Materiality is at the center of regulatory activity and political debate, and materiality can help prevent crises and corporate scandals as well. So how to conduct an effective materiality assessment? So in order to get the most value from an ESG materiality assessment, a company must start with a clear understanding of what information it's looking for, and this will allow the company to conduct a sustainability materiality assessment that asks the right questions, select the right stakeholders, applies the appropriate methodology, and presents the information effectively to help informing the decisions. Next is about why businesses need a materiality assessment. So, as we discussed earlier, strategy and comprehensive reporting rely on investigations of materiality issues, which may be understood by the individual stakeholders located throughout the ecosystem but are not organized in central repositories actually. So, what are the main sustainability materiality assessment challenges? Some examples like stakeholder engagement is perceived to be too difficult to achieve. Company leaders fail to engage in the process itself, their involvement and participation fail. The business is perceived as being too complex for a meaningful assessment. Stakeholders are unable to agree on which topics are material or not material. Failure to agree on prioritization of materiality topics, and there are too many materiality issues to manage actually. In the last, why investors shall consider ESG materiality assessment in their investment decision making? So investors make decisions based on the information they can acquire, and if a company doesn't provide that information on its sustainability and ESG situations, then investors may turn to third-party ESG rating system to fill in that lack of essential data. If there is unable to make use of third-party ratings, they may assume that company puts little or no effect into its sustainability and ESG status. So which may in turn lead them to leave the company out of their investment portfolios and take their business elsewhere. So this is how we complete our discussion about basics of ESG stakeholder engagement and materiality assessments. Thank you very much. We will come up with the new topic for the discussion. Thank you.